Good morning. Happy Friday here. It's Brett with Directors with this week's Friday market recap. So, as always, like to start off here with the closing prices of the 10-year note. So, for Monday, closed at 4.104, Tuesday, 4.155, Wednesday, 4.192, Thursday, 4.298, and so far today, 4.308. So unfortunately, did see a drive up in 10-year note and therefore mortgage rates this week. A big thing for us to see is this trend back and forth. So for example, on Feb 26th, the 10-year note closed up again at 4.315, then drove down to 4.089 by March 7th, and now back up again to that 4.3 range. So really the markets are being super driven right now by inflation data. It's the number one factor out there. Of course, the Feds are focusing on it too. So we've been seeing the last few weeks here, one report comes out a little bit up, rates in the 10-year note move up. Next report comes out a little better than expected or as expected, that drives the market down some. So just a lot of back and forth and just unfortunately a lot of volatility with that. Now, it's still been in a relatively tight range of, maybe that 4.3 in the upper end down to the 3.9 or 4.0 in the lower end, kind of bouncing back and forth there. But it does feel we're relatively stuck here until we see some consistent data, one way or the other with inflation versus this back and forth. So, this week, both the CPI and the PPI inflation was released. Both showed a little bit higher data than expected, and that is what drove rates up throughout this week, especially yesterday with that PPI report for us. The next Fed meeting here is Wednesday, so probably not a ton of movement in the marketplace until we hear the Fed meeting notes released. Quite honestly, markets are expecting pretty similar mindset from the Fed. Hey, we're going to be watching inflation until there's a clear sign that inflation is moving down and we feel justified to lower rates. So still not any Fed movement from a rate perspective in the near term based on most economists out there. Despite the interest rates moving back and forth, we've still seen, even with rates going up some, a lot more buyer activity out there. I think as interesting it is, even though the markets are getting more and more competitive for buyers, from like a mental standpoint or a mindset standpoint, that makes buyers almost want to get back into it more. That idea to say, hey, if a bunch of people want to make an offer on this house, it must be justified. It must be a good thing. Now, I strongly believe it's been great to buy real estate at any point for us, and folks want to get back into it. So again, rates working against us a little bit, but overall as an industry, seeing a lot more buyer confidence, which is encouraging. So as always, anything I can do questions-wise or scenarios, please feel free to reach out. I hope everyone has a great Friday and an awesome weekend here. Thanks so much. Bye.